What is a divorce lien? Brought to you by the cashflowsolutionsblog.com. The divorce lien is basically an agreement between the spouses on how to split up the family home, and it's a way that you don't have to sell the home in order to satisfy the financial obligations of a divorce settlement. One spouse keeps the home, the other one gets a note. So a classic example is the ex-wife decides to stay in the house and the ex-husband takes back a note for that portion of the divorce settlement for which he hasn't been paid yet. And why would you do this? Well, usually it's done when the only major asset in the divorce is the house itself. If you had a large checking account or some investment account you could split up, then there would be a way that you could write a check to one spouse and then the other spouse keeps the house. The other reason is often social, where the kids want to stay in the same neighborhood or the same home, and you can allow some continuity in their life. So how do you set this up? Well, first, get a lawyer. It's always best when dealing with a semi-complex real estate transaction like this to get some legal advice on how to set it up, because it's basically just like a mortgage. Some of the important things that you want to see in a divorce lien are a set term. There's going to be a date certain out in the future when the note is done. It's going to last for a term such as 60 months or 2 years, 4 years, 10 years. You sort of set that by agreement. You want to agree how the payments are going to be made during that time frame. Are they going to be monthly, annually, quarterly, or is there only going to be one big lump sum payment at the end? Usually there's some combination of payments and a lump sum at the end. And then of course you want to set an interest rate, because one of the spouses is waiting for usually his money for quite a while, and an interest rate is an appropriate way to deal with that. Now once you've set it up, you've now set up a mortgage, basically a note that can be sold. As long as you have all the appropriate documents, the original note, and you can talk about and prove what all of the terms and payments are, you can submit it for a quote and see what it's worth. The big thing is, don't do it yourself. Setting up mortgages that have so many different rules and laws that change from state to state, that go talk with a lawyer and see your situation set up correctly. So go check out the Cash Flow Solutions blog with any other questions and comments, and